Let me ask you something. What if you had the chance to buy a multi-billion-dollar asset, but you only had to pay what it cost to get it? And on top of that, what if they threw in a massive global infrastructure business for free? Sounds almost too good to be true, doesn't it? Well, that is the core argument we're going to unpack today in this explainer on BitMine immersions.
And look, this isn't just some crazy hypothetical. This is the central idea behind what some people are calling one of the most asymmetric investment opportunities on the market right now. The whole thesis is that you're essentially buying a massive pile of Ethereum at its current market price, and you're getting everything else the company actually does, its entire business operation, for absolutely nothing.
So here's the bottom line. BitMine Immersions, or BMNR, is trading right around its net asset value. Now, what that price implies is pretty wild. It suggests that the company's huge crypto staking infrastructure, its tech, its future plans, the actual business is worth exactly zero. Zilch. That's a pretty bold statement for the market to make.
And it's this really unique valuation that creates what could be a powerful asymmetric opportunity. So let's dig in and break down what that actually means. Okay, first things first, let's just do a quick refresher on net asset value, or NAV. It's really simple. You just take a company's assets and subtract its liabilities. Now, for BitMine immersions, the asset side of that equation is almost entirely their huge stash of Ethereum. So the stock price is basically just tracking the value of that crypto. Now, let's take a look at what the stock's been doing lately. I mean, after getting absolutely hammered in a brutal correction from its January highs, which, by the way, shook out a lot of retail investors, we saw this huge 17.6% bounce and on massive volume. That kind of move, it often signals that the institutional investors, the so-called smart money, are quietly stepping in. They saw that sell-off as a buying opportunity, creating what some analysts are calling a gift-wrapped entry point.
But an interesting chart isn't really enough, is it? The core of this thesis rests on what can only be described as a financial fortress, and it's built on three fundamental pillars. Let's see what they are. So pillar number one is just the sheer scale of what they own. BitMine Immersions is holding 4.285 million ETH tokens. Now, to put that number in perspective, that is over 3.5% of the entire global supply of Ethereum. So when you buy this stock at its NAV, this is what you're actually buying. Pillar number two is just as critical, especially in the wild world of crypto. The company has zero debt. That's right, a big fat zero. I mean, while their competitors are leveraged up to their eyeballs and basically face disaster with every little market dip, BitMine Immersions is sitting pretty on a fortress with up to $690 million in cash. That is a serious survival mechanism. And pillar number three? Well, that's the engine. Through what they call their alchemy of 5% staking strategy, where they basically lend out their ETH to help secure the network and get rewards for it, the company's generating roughly $1 million in net income. Not a year, not a month, every single day. That's an annualized run rate of $360 million in pure cash flow, whether the market's up or down. And believe it or not, they're not even done building. In early 2026, they're planning to launch something called the Maven Network. This move is huge. It basically brings their entire staking operation in-house. They're shifting from just being a player in the game to owning the game itself. And the goal? Simple. Cut out the middleman and grab even higher yields. So with fundamentals this strong, you have to ask yourself, right, why on earth is the stock price so beaten down? Well, the answer might lie in the technical chart setup, which honestly looks like an absolute powder keg just waiting for a spark. So if you look at the chart, a key momentum indicator, the RSI, is way down in what traders call oversold territory. That suggests the selling might be way overdone. But the real kicker is the short interest. For every one share that's available to be bet against, 29 are already sold short. That creates a massively coiled spring. If any good news hits and the price ticks up, all those short sellers are forced to buy back shares to limit their losses, which can just ignite an incredibly powerful rally, especially if the price can break above that key $21 resistance level. And here you can see just what that potential upside looks like. I mean, a conservative target might see the stock recover to around 26 bucks, but the big institutional players, they've set price targets anywhere from $39 all the way up to $60. If they're right, that's almost 200% upside from where we are today. Now, here's the best part. We might not have to wait very long for that spark we were talking about. There are actually several major catalysts on the calendar for this week alone. So on Monday, we're getting the ETH accumulation update. That's going to tell us if the company's own management used their cash to buy the dip.
Big confidence signal. Then on Tuesday, there's a key White House meeting on crypto regulation, which could give the whole sector the green light it's been waiting for. And all the while, bubbling just under the surface are these persistent rumors about the US maybe creating a Bitcoin reserve. Any one of these could be the trigger.
But of course, we've got to be responsible here. No investment idea is complete without taking a hard look at the risks. It would be crazy to ignore the elephant in the room. And there are two really critical factors that could completely blow up this entire setup.
Okay, first, shareholders recently gave the company the okay to authorize up to 50 billion shares. Now, this is a classic double-edged sword. On one hand, it gives management a massive war chest to go after their growth strategy. But on the other hand, it gives them the power to seriously dilute anyone holding the stock by selling all these new shares into the market, which could put a lid on any big rally. And second, and this one is the big one, it's totally non-negotiable. This entire thesis lives and dies with the price of Ethereum. If ETH breaks down below that critical $2,000 floor, this whole trade breaks right along with it, period. That level is the bedrock that the entire valuation is built on.
So that leaves us with the ultimate question. Is Bitmine Immersions an incredible discount on a financial fortress with a really clear path to growth? Or is it a classic value trap, where the risks of dilution and a crypto market collapse are just being dangerously overlooked? That's the billion-dollar question that the market is going to answer, probably very soon.